Hello and welcome to Africa Business Weekly, the last episode for this month. I'm Akin Obakeye. From Nigeria's rebased GDP numbers for 2024 to the G20 meeting of central bank deputies and deputy finance ministers in Cape Town, as well as Rwanda's ambitious plans to expand its fintech sector. This week's episode is packed with key business news from around the continent. Tabitha and Karabo are with me to take you on this engaging show. But let's join Tabitha right now for updates from the east of the continent.
Thank you, Akin. This week, Rwanda secured a major win with events boosting cross-border markets and attracting large-scale investments, solidifying Africa's fintech position. CNBC Africa's Flora Limoki spoke exclusively with Jean-Guy Africa, the new AfDB CEO, on driving Vision 2050 and NST2 with a focus on economic growth, climate resilience, and social inclusion.
We're aiming to create around 1.2 million jobs by 2029, and that translates into 250,000 jobs annually. So I mentioned the vision statement, Vision 2050, that is implemented through national strategies for transformation. We're into NST2 between 2024 and 2029, and so that's the second, if you wish, the implementation strategy, which is then deployed into multiple sector strategies: agriculture, trade, manufacturing, and so on, to drive those goals. So the way we organize ourselves at the Rwanda Development Board, once you have a roadmap, a very clear roadmap of where you're going, is to structure our outreach, the type of incentives that we provide, fiscal and non-fiscal, so that we drive the kind of investments that help us grow agriculture by 6% a year, grow industry by 10%, and so on. So if you wish, this is the lens through which I see my tenure. What can we do to drive the implementation of NST2, and what actions are required? In the immediate, the playbook is already out there. So my role is really to execute it with the resources that are placed at within RDB, its people, its systems. We house close to RDB really functions as a one-stop center. We want to make the experience of the customer as seamless as possible. We have brought together close to 24 agencies, and we provide close to 400 services. And if you were to ask me what we're aiming for in the immediate, it's really to digitize as much as possible, to automate a lot of those processes. We are actively working on that. It's already a big achievement to bring them all under one roof. RDB's mandate is quite unique. The next stage in our evolution is really about driving an element of seamlessness and automation in the way the services are provided to the customers. Yes. And
looking at NST2, there is a conversation on easing doing business in Rwanda. Therefore, what is the priorities in terms of streamlining the ease of doing business in Rwanda in order to also draw more investors, both local and international investors, to Rwanda?
It starts with making the process as simple as possible. And the thinking behind the one-stop center is really that one stop. The idea is the investor should come there, set up the company within 6 hours, which is our aim, and then with the licenses, all the requirements that you can imagine an investor has to get: a construction permit, licensing for various sectors, in order to operate. The promise that we make is to create a one-stop shop where all those services are provided. So simplifying the process as we're working on some of the more structural issues, because it's not just a regulatory challenge for investors, but you also must reduce the cost of doing business. So we're actively working to make energy more affordable, make communication more affordable, make transport more affordable, turn Rwanda into a logistics hub.
Still at home, we hosted the Inclusive Fintech Forum, which featured major agreements, including Rwanda and Ghana signing new fintech licensing passport systems. The collaboration aims to create a more integrated and robust fintech ecosystem. I spoke to Leila Rwagasana, fintech lead at Rwanda Finance Limited, who highlighted Rwanda's ambitious plans to expand its fintech sector, along with other key takeaways from the forum.
This is an exciting period for Rwanda, for the continent, particularly in fintech. I would actually say that yesterday was such a great day for fintech enthusiasts, innovators, even policymakers in fintech. And here is why, which is answering the question of key takeaway. I think one was the signing of the Memorandum of Understanding yesterday with the Bank of Ghana, along with PAPS, pretty much launching the Africa Next generation of digital public infrastructure, which we call in short Project 54, pretty much looking at uniting Africa in the digital payment space, and also looking at having different fintechs. If I put it very simply, fintechs operating in Rwanda and easily entering Ghana, for example. We signed with Ghana, so we are starting with Ghana. So I'm really excited to see that there won't be any license issues for scaling for innovators, and that license portability, which is what we call in the fintech language, is what is really exciting. So that's, for me, number one, that's a key takeaway that we are really excited about. And we are even excited to start working towards for the fintechs here in Rwanda, for the fintechs in Ghana, and also seeing other countries joining us in this exciting project. The second key takeaway for Rwanda itself, now coming back home, is to see different innovators in the fintech space being in this, pretty much in this platform, in the same room with investors, connecting. We just had a very successful pitch event, we called IFF pitch event, where there was a pre-selection of fintechs, Rwandan fintechs, that were actually being exposed to pitch for a fund, those who are raising funds. We partnered with Luxembourg Development, who has launched their demonstration fund focused on fintech. And it was actually so inspiring to see some of these innovators, very young, designing products that are actually coming to impact for our own market, not just Rwanda, but even looking at scaling across Africa. And really, we are building solutions for our own problems. And I even think that partnering with these other development agencies, bringing funds, bringing other investors on the table, it was also an exciting part to bring this platform for our fintech ecosystem to be exposed to.
And that's a wrap on this week's biggest headlines from the Eastern region. From game-changing investments to bold fintech moves, the future is unfolding right here. Akin, over to you.
I agree with you, Tabitha. And of course, Africa's future is fast changing. Let's join Karabo as she fills us in on game-changing conversations from Southern Africa.
Thank you, Akin. Well, this week, discussions at the G20 meeting of central bank deputies and deputy finance ministers in Cape Town kicked off with a focus on the challenges confronting emerging markets and developing economies. CNBC Africa reporter Palesa Mofokeng caught up with Paul Hanratty, who is the CEO at Sanlam, to discuss sustainable ways to accelerate the growth of African economies. Let's listen in.
Well, Sanlam and Allianz are partnering up to sponsor some of the work at the B20, and we obviously see it as a way to contribute to the creation of policy and maybe some lasting solutions. It's obviously a global summit, the B20, so we have to take into account the issues that face the entire business community around the world. But we will try to bring in a bias to Africa because we're net hugely positive about Africa. We want to invest in this continent in years to come. So it's very important for us that the agenda for growth really supports the African story.
And how do you see current economic operations or current trends, in fact, affecting operations and doing business in South Africa? And what's the role that B20 can play to address these?
Look, the whole African continent is actually growing at quite a decent speed. South Africa itself is growing a little bit more slowly than the rest of the continent, but there's no question that it's one of the fastest growing regions in the world. Obviously the demographics are hugely supportive, but they also create issues of their own, because we're going to have a lot of young people coming into the workforce in years to come. So if you look over a long period of time, both South Africa and the rest of the continent actually are very good places to invest, but there's a very high perception of risk on the continent. So we need to work hard to reduce perceptions of risk, attract more capital, and we need the South African and other governments to adopt business-friendly, growth-orientated policies, and to be consistent in following them, to make sure that they've got sound fiscal and monetary policies to back up the growth agenda. And I think that if we do all of that and make a contribution as Africa to the global growth story, that's really a win for the whole world.
Paul, I'm glad you touched on risk, because it brings me to my next point. What are the risks that you think businesses then should prepare for, at least in the next 5 to 10 years?
Yeah, look, sure. You know, the problem with risks is that whatever you try and predict, they always come from somewhere else. And I guess business people, one of the things we have to do is we have to be agile, and we have to be resilient, and we have to sort of go with the punches. But I think, you know, our continent has got a whole range of risks. We've got a lot of climate risks that come much harder at us because we're more vulnerable. I think energy risks are also a huge issue. I mean, Africa is short of energy in any event. So we've got to work quite hard as a business community to find new ways of creating energy sources for the continent, because without that, you know, we can't grow. Obviously, geopolitical risks are really important as well, and those actually roll back into our continent as well. So, you know, it's a range of risks that people have to deal and manage.
Sure. Now let's speak about the value of private to public partnerships in driving sustainable growth, and what role does the B20 then play in fostering these collaborations?
Look, governments almost in every part of the world are over-indebted. I mean, in many cases, debt levels are much higher than they were after the Second World War. The post-financial crisis and then COVID have combined to really get things out of whack. The business community, on the other hand, balance sheets tend to be in pretty good shape. So there's no question that the business sector is going to be absolutely vital to getting the growth engine of the world going again. What B20 can do is actually show governments how business can slot into this. We don't compete, but we're a very strong partner for society and for governments, actually, to drive prosperity, really, in countries across the world.
And in more news driving the Southern Africa region, several candidates have expressed their interest in succeeding the AfDB president Akinwumi Adesina, aiming to either build on his legacy or chart a new direction for the bank. My colleague Fifi Peters spoke to Amadou Hott, who is one of the candidates for the African Development Bank presidency. Let's listen in.
I always have had this, passion to serve. When I was an investment banker in New York, a young banker, I always wanted to go back to Africa. And if you see my career, I went from New York to London, Dubai, Nigeria, back to my country, and then took this role as vice president of the African Development Bank, and then a minister of economy, planning and cooperation. And my passion is Africa's development, is Africa's transformation. This continent has given me everything that I have. I am who I am today because of this continent, because of public schools, because of public service as well. That's why I want to give all what I have to contribute to the transformation of this great continent that has a lot of challenges, but great opportunities, great resources that needs to be harnessed for the benefits of the people of Africa.
I go back to the temperature of this race. So, because you would be aware that one of the entrants also from Zambia has got quite significant backing. He has had the official endorsement from the SADC community and also has quite a stronghold in East Africa. So I suppose it's a question on your support and where you see it coming from.
You know, the support is coming across Africa. Over the last few months, I've been meeting leaders, governors of the bank, civil society, the private sector. And what people tell me is that they want the best people for the job, especially now because we are in a situation where the continent needs to mobilize more resources, have very strong policy reforms, and also implement fast because of our young people and our women would like to have change in their lives. And the best way to have change in people's lives is to provide them with jobs. And I strongly believe that the support that I have also is across the 5 regions of Africa. And as the president of the bank, I will be the president of the entire the bank for the continent, not just for one region or for one country. And if you see at my background, I've been a banker, I've been a policy maker in Senegal as minister, but at doing that, I was also working for Africa. I was involved in the G20 discussions. I was Sherpa of the president for G20 in Bali, when I met actually some of the key shareholders also of the bank, and defended Africa's position, defended that Africa should have a seat at the table because of who we are and what we represent today in the world, and we deserve to have that seat. And as the minister also, I used to work a lot with the ECA, with my dear sister Vera Songwe. We used to gather our colleagues to defend Africa's position, to defend for the special drawing rights for Africa, to make sure that we have the rechanneling of SDRs to countries that need it from the countries who do not need that. And we work together in the summit of financing Africa's economies that was organized by France in May 2021. I was the co-chair of the committee that organized the summit with the French DG for Treasury as well, the French government, and that was a success. So I've been serving Africa, not just my country. As the VP of the bank, we increased the private sector investment of the bank by 150% in only 2 years. This is what I do. What I do is mobilize resources. What I do is mobilize the best people to serve in any position I've gotten in the past, and more importantly, to have impact, to give people that sense of drive, that sense of, togetherness for impact. And this is what I will do as the president of the bank if I'm elected and trusted by both the regional member countries and the non-regional member countries of this bank.
And that is a wrap of the business news moving down south of the continent for this week. It's back to you, Akin.
Indeed, the race to May 29 is heating up as more candidates express their intentions to move the AfDB to greater height. Many thanks there, Karabo. Now, in West Africa, according to data from the National Bureau of Statistics, Nigeria's GDP grew by 3.84% in real terms, with crop production, trade and telecommunications, and information services emerging the top 3 contributors to Nigeria's real GDP in the 4th quarter of this year. Chiken Wagu, director at Novus Agro, unpacks the data and lists strategies to curb inflation and boost crop production in the zone.
One niggling thing is that nominal GDP is growing at 18 point something, yes, and then real GDP at 3 point something means there's still quite a lot of inflation. Without dissecting the numbers too much, one wonders what kind of inflationary figures are being used to calculate the GDP. Is it the old or the rebased one? If it's the old one, then that's pretty good. If it's the rebased one, then that means that these numbers probably would have been a lot worse, without the rebasing.
Yes. If we were to use the 2010 model, for example.
Exactly, the 2010 model. So one would want to know that and then look at what has happened. Obviously, every quarter 4, right, agriculture, especially crop production, does, help the GDP a lot because that's at harvest time.
Yes.
So especially for real GDP, because quantities or volumes are going to grow within quarter 4, any which way you look at it.
But still going back to the rebased CPI data now, and then the introduction of the special indices, we're looking at farm produce, energy index, and imported food index. How much clarity do you also think this also brings to the fore when we're looking at countermeasures to ensure that we reduce that inflation target burden we have at this moment?
Well, you know, I think it was Mark Twain that said there are lies, damn lies, and statistics. You know, the truth is that GDP figures are meant for probably a special class of people. You know, if you're in business, you know, you always know that inflation figures, right, go into calculating net present value of money, IRRs, and everything. And if you're in government, but in real terms, on the street, you know, we've always questioned, you know.
But all this reflects the realities of the market.
Reflects the realities, you know. So I would say, yeah, fine. It's good to have lower inflation figures, but do actual things.
And one of the actual things that is clear is that monetary policies are not enough, and that's why we also have talked about the complementarity on the back of the fiscal measures to address these structural problems. So, Mr. Wago, let's talk about how the country as a whole is positioning going forward into the year. One of the biggest feelers we had for last year was the target of all year round farming. I don't think we've made much progress within that regard. But now positioning, the rains are coming again. What sort of price movements do you expect on the back of this lack of preparedness, especially around our farm belt, and then for price movements, commodities market? What are you looking at within the grains?
Number one is that once it starts raining, you know, suddenly we're going through the lean months, you know, so you expect the prices to go skyrocket, you know, before we get towards the end of the year when the harvest would come out. Obviously, if we had paid a lot more attention or made the investments necessary to boost dry season farming, you know, at least we would have, you know, 2 good harvest periods within the year. And I think it's critical that we do that, you know. And of course, one of the big issues that we've discussed here from time to time has always been that about post-harvest
losses, yes.
Yeah, you know, I think it continues to be a low-hanging fruit.
And in other developments, now the CEO of Open Access Data Centers, Ayotunde Koka, believes the outlook for data centers build in Lagos is strong and is emerging as the next key mega hub outside of South Africa. It says this year will see multiple megawatt hyperscale-ready data center launches, and Africa will need more than 700 data centers in the long run to fully benefit from the growing segment and ensure its digital sovereignty. Let's listen in.
You use the term hyperscalers. These are these large companies that provide cloud services that we all consume here, but actually hosted elsewhere. Some are in South Africa. But you see, the further they are from the point of consumption, the less the performance because of latency of that distance, okay? And hyperscalers tend to be the large companies like your Microsoft, Oracle, Google, Amazon, Alibaba Cloud, and the big global cloud providers. Now, they demand a certain type of scale of data center because of the sheer amount of compute they provide, right? And that's what I mean about the hyperscale-ready data centers increasingly coming into Lagos. You have quite an amount of megawatts, but you know, power is one measure of how large a data center is. So a 10 megawatt is a pretty large data center, okay? And you know, you have the demand in that kind of scale of megawatts. So we have a few data centers that are in line. You know, we are implementing over the next 12 to 18 months a 24 megawatt expansion of a 2 megawatt data center, large hyperscale data center, you know, the scale data center that we have here in Lagos. Other providers also have some of these data centers coming in. So people say, well, if you build them, will they come? Well, if you don't have the scale, they can't come. And all of the you know, the metrics and indicators in Lagos, for instance, are indicating that that's right, with the right facilities, that those hyperscale providers will come. There are other things that you also have to have in place, is the level of connectivity and interconnectivity that's available, because you have to get out to the users out there.
Yeah.
And also energy. So there's three aspects that come together: having the energy available, the connectivity available, and having these scale data centers available. We have those scale data centers coming in, then we're ready to bring on the workload to Lagos.
It's one thing to look at this from the lens of the developments that we first need to put in place here to ensure that we can have an ecosystem of thriving data centers here. But then you also have to put into consideration the way the world is moving. And we're seeing that huge switch to cloud. And that's definitely going to keep happening over time as technology continues to evolve. And it means that definitely we have to be future ready in terms of how we position ourselves globally. And also issues like data security and data sovereignty also mean that we definitely need to not to have most of our information out there.
Yes, I mean, we live in a global ecosystem of data. And you have to get the classifications of what you hold locally and what you're able not to hold locally and so on. And the efficiencies of having a compute near close to the point of use. Okay. Now, there's an analogy I give. I call it this: Africa is a sachet economy. You see, a few people will buy, say, a pint of milk or a packet of some milk. Not many people do that. In Africa, they would buy a sachet. They earn today to spend for tomorrow. And that's why the mobile networks have done very well with the recharge process. Some people recharge in the morning for just the morning and earn money in the morning to recharge for the afternoon. Now, the way you transfer that analogy into cloud is that cloud is a way of delivering technology to the point of use where you consume as you need and you pay as you can afford and you pay as you grow. So you're now able to get technology just as now you have POSs in the hands of the market people and mobile telephony and all of that. They will start needing to use cloud technologies to manage their books, to manage their lives. You have people on TikTok, they run businesses on Instagram, and so on. All of this needs compute close to the point of use. And that's why we will see this increased consumption of cloud technologies.
And that's all we can take on today's episode of Africa Business Weekly. Keep a date with us same time next week for more in-depth analysis and news on Africa's dynamic business landscape. Special thanks to my colleagues Karabo and Tabisa. I'm Akin Obakeye. Enjoy your weekend.